Welcome to Stock Market Today, Thursday, October 29th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at @DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. Also give you daily stock ideas to consider, and that hits your inbox every trading day before the market opens. So it was an ugly day yesterday. Stocks closed sharply lower, falling hard into the close. Really an acceleration in the last 15, 20 minutes of trading. All sectors lower on the day as all of the major averages finished down over 3%. Tech, energy, and comms took the brunt of the damage. Treasuries were mixed. And what was surprising to me is for most of the day, treasuries were actually not bid. It really wasn't until that surge to the downside in equities in the final 15, 20 minutes of the day that saw some buying pressure in the treasury. So kind of interesting there. Dollar saw good gains, however, against the euro, and sterling was little changed against the yen. Gold was down 1.7%. WTI crude down 5.5%. U.S. inventory data combines with global demand concerns. As we get to the desk this morning, futures are popping a little bit, up about 70 basis points on the S&P 500. That's after Asian markets were mostly lower overnight. Australia, Taiwan falling hard. China actually traded higher, though. European markets are unchanged to slightly better here in the early goings. For us, kind of midday for them. Treasuries are unchanged to slightly firmer as well. The dollar is better against the euro, but weaker versus the yen. Gold is unchanged. WTI crude is down another 3.5% to kick us off on Thursday, which arguably, I think tonight is going to be really telling in what goes on into the end of the year. I think tonight, along with Tuesday, are two of the most important days upcoming for potential path going into the end of the year. Tonight, we have Facebook, Amazon, Apple, and Google reporting earnings. And all of that's playing out with this as your market structure. S&P 500, SPY still in the zone. And if the bulls are going to keep the ball, they got to do it now. No two ways about it. If the bulls are going to keep the ball, it has to be now. SPY support 320. If we break 320, I mean, just kind of take it back to its basic level. If we break 320, what do we have? Lower lows and lower highs. Your textbook, I teach a class on technical analysis, your textbook definition of a downtrend. Lower lows, lower highs. Teach it to you on the first day. All right, Qs, that level's 260, right? That's key support, right? Same dynamic at play. Break 260, lower lows, lower highs. Textbook definition of a downtrend. IWM picture is a little bit more nuanced. 140, 145 is support. 160 probably becomes resistance now in the near term. For resistance to the upside on the Qs, it's now 280. And for SPY, it's 340. So basically the top end of the support zone now becomes resistance. Okay, that's just kind of near term how to think about it as you're gauging how aggressive you want to be. So now what we've been saying is SPY, IWM, and Qs are all oversold by our work. And we want to use oversold in a support zone as an opportunity to begin to become more aggressive. Now, if you've done that over the past 3 days, mea culpa, slightly early. I guess yesterday was the best day to do it, but fine. Now what we look for is support zones to hold, and then you take out these near-term levels to the upside. SPY back above 340, start adding to the names you've been buying this week. And that's how I think about it. That's my framework. I can tell you I've put money to work this week. But now I want to see signs of a stabilization, right? I'm not going to sit there and just kind of support the whole way down, right? And we know where we're wrong, right? We know the levels where we're wrong. So it's not about guessing. It's not about making a call. It's about assessing the landscape, developing the roadmap, and then executing. If we break 320, I don't care about anything that I bought this week. My stops will probably trigger, and I'll go. And I won't think about it at all. Let's look at our market in a minute. What are we writing about in the note today? Chaikin Analytics clients are going to be reading about how the SPY is within 2% of the level that must hold. We're within 2% of 320, and it has to hold. Tech is under pressure. Tonight's going to be a big night for the group. We're going to actually screen for ideas in the space. Breadth deteriorates, but short-term metrics are now washed out, and futures, as I said, point to a higher open today. Obviously, I don't have to lay it out. You can see it, and you would probably infer from yesterday's action that the power bars deteriorated. Dow 1 to 7 bulls to bears after losing 3.3%. S&P down 3.4%. 83 to 135 bulls to bears there. NASDAQ takes the brunt of the damage. 11 to 21 bulls to bears. Small caps actually an outperformer. Right? No two ways about it. They outperformed. They were down less than the S&P 500. 622 to 316, though not saved from seeing some deterioration in their power bar ratio. Now, though, the only group with a bullish ratio. Bonds upticked, but again, you would have expected to see bonds a lot higher, given this carnage in the equity market. You didn't see it. According to the Chaikin Power Bar, small cap stocks more bullish than large cap stocks. Major markets are mixed. Let's hit our stocks of the day now, stocks plural, because we're going to continue to run with the Tuesday, Thursday screening. And tech's been under pressure. No two ways about it. What I've done in my note today is I've highlighted XLK and said, here's the level that has to hold. So similar to what we've done with SPY and Qs, I look at XLK and I say, all right, 110 is the level. If we're above 110, we're oversold. We probably want to be looking for opportunities. If we break 110, it's wrong. The trend is now down. You take your stops and you reevaluate. So what I did today was I took a screen of some industry ETFs, right? Some narrower ETFs. You can see them here, XITK, XSD for the semi, software, just kind of a broad-based tech ETFs. I want stocks that are very bullish, as well as neutral plus have bullish fundamentals. I want stocks that are oversold and strong relative strength. Okay, pretty simple, pretty straightforward, right? Not going to get too cute with things. Show me the oversold stocks in an oversold sector that are still outperforming. Here's 22 names to take a look at. SolarWinds. SolarWinds was my stock of the day recently. It was only down 2%. I mean, okay, it's down 2% is bad, but it's better than down 3.5%. All right, JD is a name that's of interest. Highlighted it here yesterday, right? Taiwan Semi, we're going to want to pay attention to what they're saying. Synopsys, right? A lot of names here. I mean, Amazon, we're going to hear from them tonight. Adobe, big difference between software spaces, right? We talked about that yesterday. But, take a screenshot of this, 22 names that you should be thinking about. I'm not saying run out and buy them. I'm saying add these to a list and do some work on them. That's what I would do. Actually, that's what I'm doing. These are on a list for further evaluation as I see how they trade today and as I, do a little bit of reading on the names. Let's look at our sector tracker now. Movement of the last 5 days. Everything down over the last 5 days of trading, as you might expect, especially with the damage that was done yesterday. The key is where is the relative strength, and in this case, what went down less? Utilities. We've been talking about that for quite some time. Healthcare, comms, discretionary at the top of the list. Staples, fins, REITs, materials, middle of the road. Energy, disaster. Tech, under pressure. We just talked about it, though. And industrials, right? So a lot of shifting and moving under the surface of the market here right now. I think the market's trying to figure out if it still wants to be a market that's driven by large cap growth, or if it wants to rotate and shift leadership. We're starting to see some pockets of value do well. We're starting to see some pockets of small cap do well. We've seen groups like materials and industrials come on. And by they come on, I mean over the past few months, right? So I think, markets going through a little bit of an identity crisis right now is probably the best way to think about it, right? A market that for the past couple of years has largely been driven by, or, saying, what's leading the market? Large cap growth, right? Fan mag. There are signs that that's changing. And markets are trying to come to grips with it. And there are a lot of moving parts. I can argue bull cases. I can argue bear cases. And, there's going to be some volatility. So just keep it in mind, manage your risk, because it's, early days for some trends that, if they don't gain traction, you're going to get stopped out quickly. So manage your risk. Industry in focus, biotech services. Past 6 months been a leader, up by about 2% over the S&P. But Ratio is weak, 51-8, ranked number 20 of 21 subsectors, moving up one slot over the past week. Inovio, Apellis, and Adverum are very bearish names within the group. Now, biotech is kind of interesting because, for the early stage biotech especially, I'm not talking about the Amgens and the Regenerons of the world. Those are real companies, right, with products and revenue, and we can P&L statements. But early stage biotech, right, those are science projects, names that don't have drugs on the market yet, or very early in the production process, right, or the commercialization process for drugs that may have been approved. They're their own story, and it's kind of interesting, right, because names like that don't necessarily ebb and flow with the macro narrative, right? They have their own idiosyncratic story with its own risks, right? So I always, people like to look at biotech as a group, and you can get a sense for what's going on, right? Nice consolidation here within the context of an uptrend, oversold, slight outperformer, really been an inline performer for the past couple of months, right? So the group itself kind of looks interesting, was an outperformer yesterday. Bullish stock trend, we'll call it weak with the close below the trend line. So you can own the group, right? I almost view that as, especially if you own early stage, I almost view that as kind of private VC investing, right? Or public VC investing rather, because you don't know. You just own a basket of these early stage biotechs. You get a few winners, right? You're probably going to get a lot of duds and a few that blow up. And hopefully the winners offset the duds and the blowups over the course of time. Or if you are interested and have the skill set to drill down on the data and these companies that are pre-production, right? Pre-commercialization, drugs are in the clinic, you have an edge. I don't have that edge. I kind of just focus here and what I see as a consolidation within the context of an uptrend. Let's talk about what's trending now. Let's keep this simple. The gainers board are all earnings related. The losers board, CHRW, UNM are earnings related. Carnival, more postponements, right? Opening trades under pressure with lockdowns in Europe or increased restrictions in Europe. Akamai, just kind of ugly. Content delivery networks, remember Fastly, having a tough time of late. Those are your gainers and losers. Let's dive in. Damage at the breath level, no two ways about it. But short-term metrics are actually washed out. So percentage of stocks above the 200-day, back below 60. So no longer a healthy majority. We still have a majority, but no longer a healthy majority. Percentage of stocks above their 50-day moving average, 27%, getting down to that level that we saw in September when we started to become more constructive. But I wouldn't call it washed out like what we saw in March and April. Advanced decline line breaking back below the breakout level. So moving back below the breakout level, we'd like to see that recaptured quickly. Remember, the advanced decline line is usually decent at tipping its hand for the overall market, tends to break to new highs ahead of the market. Now, it did that in early October, and now it's giving us some pause. But what's interesting to me, and I go through this in a lot more detail in my note, which you should be getting if you're a client or if you're taking the trial, is how we're washed out short-term metrics, right? I look at the percentage of stocks on MACD buy signals, washed out levels, percentage of stocks above their 20-day moving average, washed out levels that generally in the short term have led to near-term upside. So kind of interesting to me. We do have the futures bid this morning. Let's see if we can hold that. Let's see if we can build on that. Here's tech again, right? The level's 110. XLK on an absolute basis broke below the 50-day moving average. That's not a good look. Still above the 200-day, still in a long-term uptrend. The level that matters is 110. Okay, same as the S&P 500, where 320 is the level that matters. What do we have here? 110. If we break below 110, what do we have? Lower highs, lower lows, now in a downtrend in the intermediate term. If that were to play out, I'm going to watch the RSI here closely. If it becomes oversold on the break of 110, we know there's momentum. If it breaks and becomes oversold, there's probably downside momentum, at which point you'd probably look for the relative to break as well. Finally, though, I think there's hope for a hold because Taiwan, a big tech hub, has not broken down. It's going to wrap us for today. Have a great Thursday, everyone.